All right, let's get right into it. The single largest asset manager in the world, we're talking a true titan of finance, is making a huge bet on a technology that could fundamentally change how all of us invest. Yep, we're talking about BlackRock and what they're calling their on-chain future.
And, make no mistake, this isn't just some small side project they're toying with. This vision, it comes directly from the top. The CEO of BlackRock, Larry Fink, famously said, "Every asset can be tokenized." And when a guy like that says something so bold, he's not just talking about an experiment. He's laying out a massive, long-term plan to completely rewire how our financial markets work.
So what's the actual plan here? Well, it really boils down to this. BlackRock wants to take their incredibly popular ETFs, those funds that let you buy a whole basket of stocks at once, and put them on the blockchain. Think of it like taking a physical share certificate and turning it into a secure digital token. This is the moment where Wall Street truly starts to meet the world of crypto.
Okay, but why? Why would a company as massive and successful as BlackRock even bother with all this? Well, to really get it, you've got to look at the system we have now and its limitations. The funny thing is, for all our high-tech trading, our portfolios are kind of stuck in the past, running on a schedule that feels, well, pretty ancient. I mean, think about this for a second. Have you ever had a great idea for a trade at, say, 10 p.m. on a Sunday night? Well, too bad. You can't do anything about it. It's a simple question, right? But it points to a huge flaw in the system. Your portfolio, your money, it basically goes to sleep every night and all weekend. It's stuck on this old 9-to-5 schedule from decades ago, which just doesn't make sense in the world we live in today.
And when you compare the old way to this new on-chain idea, the difference is just night and day. Right now, in traditional finance, you're stuck with market hours. And even worse, when you sell something, that money doesn't actually show up in your account for a couple of business days. It's called settlement. But with on-chain finance, the whole game changes. You could trade whenever you want, 24/7. And that settlement, it could happen in minutes, not days.
So how do you fix a financial system that takes nights and weekends off? The answer really comes down to one core idea: the tokenized ETF. This is the key that could finally wake our investments up and let them operate in a 24/7 world.
All right, so tokenization sounds a little techy, but the concept is actually pretty simple. All it means is creating a digital version, a token, that represents a real-world thing, like a share of an ETF. So instead of your ownership just being a line of text in some bank's giant spreadsheet, it becomes a unique, secure digital asset on a blockchain that you can actually control.
And the cool thing is, the benefits go way beyond just being faster. Yeah, we've talked about 24/7 trading and near-instant settlement, but think bigger. This opens up global access like never before, making it easier for people in other countries to invest. And when more people can trade, you get more liquidity, which is a fancy way of saying it's easier to buy and sell. It really could lower the barrier to entry for everyone.
Okay, I get it. This all sounds a little bit like science fiction, right? A cool idea for the future. But here's the thing, it's already happening. BlackRock didn't just dream this up, they've already built a successful prototype, and it's a big one. Let's look at the proof.
So back in 2024, BlackRock teamed up with a company called Securitize, and they launched their very first tokenized fund. It's called the BlackRock USD Institutional Digital Liquidity Fund, or BUIDL for short. Basically, it's a fund that holds super safe US government bonds. But instead of getting a normal share, investors get a digital token on the blockchain. This was their big test case.
So how did that test case go? Well, how does this sound? $2.2 billion. That's how much money flowed into the BUIDL fund in under a year and a half. Just incredible.
Now that staggering number isn't just for show. It was a massive signal to the entire financial world. It proved beyond any doubt that there's a huge appetite for these kinds of on-chain investment products. The wild success of BUIDL is exactly why BlackRock now has the green light to go after an even bigger prize, tokenizing stock ETFs. But here's the thing. This isn't just a BlackRock story. They might be the biggest player, but they're not playing alone. What their success has kicked off is a kind of ripple effect, a race, really. The entire industry is now scrambling to figure out its tokenization strategy.
I mean, look at who's getting involved. You've got the other big asset managers obviously watching BlackRock closely. You've got the regulators like the SEC who are already running projects to understand this stuff. And then, and this is huge, you've got the exchanges and the tech companies. We're talking NASDAQ, Coinbase, Kraken, Robinhood, the list goes on. They're all building their own tokenized systems. The whole ecosystem is moving in the same direction.
All right, let's pull back for a second. We've talked about the problem, our sleepy financial system. We've talked about the solution, tokenization. We've seen the proof that it works, and we know everyone is jumping in. So what does this all add up to? What could this mean for you and for the future of your own investments?
Well, the future that's taking shape is one where you have more direct control over your assets, a future where investing is easier to access no matter where you are, and a future where your portfolio works for you 24/7. It's about building a bridge, really, a bridge between the old world of Wall Street and the new world of digital, decentralized finance.
So I'll just leave you with this one big question to think about. If literally every stock, every bond, every fund on the planet could be traded instantly, 24/7, from anywhere in the world by anyone, how does that change not just investing, but the very concept of what it means to own something?